What's up, everybody? Let me get the tweet out real quick and then we will get started. Hope everybody had a great Christmas. 1 second. All right, got the tweet out. What is up, everybody? All right. Rolling with a Sunday prep banner, even though it's Monday. So just bear with that. I'm sure you guys all know. What's up, Josh? Merry Christmas to you and your family, brother. Not sure if we'll have a large turnout today, since it's the day after Christmas. I'm sure a lot of people are still just enjoying their time away from the screens. But we do got a job to do tomorrow, guys. So unless that is you guys are taking the rest of the year off, which if that's the case, I could not hate on that decision. That's actually something I've done before. You know, the last few days of the year are not typically extremely busy days in terms of opportunities. So especially if you know, if it's been slow for you the last week or so, I don't think you should be expecting any sort of fireworks this week. Greg, what's up, man? Robbie, Javier, how are you guys doing? Happy Christmas. Merry Christmas. Happy Christmas. Happy holidays. Give it a few more minutes. We'll see if we get a few more people in here, and then we'll kick this off. This will be the final Sunday prep, Monday prep of the year. Been doing this for, God, it feels like 2 years now or something. We've been doing these Sunday preps. It's crazy how fast 52 weeks flies. Definitely, Greg, definitely. If you guys don't mind, retweet the tweet I put out, or create your own tweet with the link to the live stream. Maybe throw it on Instagram or Facebook or wherever you have more people that would benefit from what we are about to get into and discuss. My house is overflowing with toys now. It's insane over here. We can't move to our new home soon enough because we've outgrown this place. We need more space. And before Christmas this year, I actually made my kids donate an enormous amount of toys just to make room for what we knew was going to be a giant influx of them. And it felt nice to get rid of a ton of stuff, things like toys the kids have outgrown, toys they don't play with. And, you know, it felt nice to free up some space and have a little more room. And that is completely gone now. It's insane. I'm ready to donate a bunch more toys again already. All right, guys. So it is 5 p.m. market time. You know what that means. This is the Monday prep. This is the day after Christmas. Obviously, the markets are closed today, so this will be for the week Tuesday through Friday coming up. It's the last week of the year, I believe. I'm almost 100% sure. And remember that next week, I believe, if I'm not mistaken, Sunday is New Year's Eve or whatever. The Monday is closed, right? So there's another short week coming. So we have 2 4-day weeks in a row. Guys, if you don't have a broker you can trust, check out Cobra. Hands down my favorite broker. They just sent me a Christmas package. I got another new hat, but they sent me his dope hoodie too. And they are running a special where I believe it's 3 months of whatever platform you choose for free. And I think it's up to 50% off the commissions. Check the link in the description below and get hooked up. And then even after that promotion ends, you can still use that link to sign up for a pretty good discount on the commissions, guys. Spikeet, these guys created a product that allows you to pull historical stock data on anything that's traded pretty much for the last 20 years. So you can build a database to see if you have a statistical edge. If you think you have a statistical edge, it's not enough. You gotta have the numbers to back it up, guys. Can't just use your gut feeling. And if you are, it's just being lazy, right? There's no reason to just trade off a gut feeling when we have the data there to prove or disprove whether you have a statistical edge. So check them out. There's a link in the description for them as well. ScriptsToTrade, these guys create tools for I want to say PineScript. It is PineScript, but it's for TradingView or Thinkorswim. They have a whole suite of tools. You get them all if you subscribe to the monthly subscription package. And the tools are just hands down some of the most powerful charting tools you can imagine. If you can think of something they don't have, reach out to them and they'll work with you to develop whatever it is you can dream up, okay? Tradervue, I use these guys to track my performance metrics. If you're not tracking your performance metrics, I don't know what you're doing. You probably just think this is a hobby or you like to gamble. But I have to treat this as a profession, guys. This is a business for me, and so I got to treat it professionally. Check these guys out to track your performance metrics and stop playing games. There's a link in the description for them as well. There is like a few names reporting this week, nothing worth mentioning at all. So last thing I want to plug is obviously TrueTrader. If you haven't checked out TrueTrader, guys, that's the room I moderate in along with my mentor, one of my biggest influences in my trading career, and a bunch of other moderators over there that, I mean, they are mentors, right? Like my brother Sunil, me and him have been trading together for years. He is hands down one of the best traders I know. He's over there. We have Luigi, Zeitgeist, Options Mike in the options room. Just so many really, really great people over there that are going to help you out and really shortcut your learning curve. And that's the name of the game, guys, because everybody goes through this learning curve. Nobody can skip it, but the shortest path to getting past that is going to be your best bet. And TrueTrader aims to do that, right? We are a mentorship community. So if you haven't checked TrueTrader out, check them out now, guys. All right. I am going to I'm going to get rid of the MondayPrep logo for a second because I want to talk to you guys about something that maybe we can clip later and just have as a standalone video. End of the year is coming. And I know a lot of you guys are going to do what you do every single year, which is New Year's resolutions, right? We're going to look at our year in review. We're going to see how we traded. We're going to say, what do I need to do better? What have I been doing good but could just get a little bit better at? And what have I been doing that needs to be completely cut out? One of the things most people need to do at the end of every year is see what were your biggest losers. There should be maybe just a handful of them, hopefully, right? And I don't mean like an average loser. I mean the ones that when you look at your year in review just stick out like a sore thumb. Those are the ones you need to look at the most deeply and ask yourself, like, what is it that stands, what is it that they have in common, right? What is it that that gets you into those situations? Is it, starting with a feeler size and having that effort attitude because it's really small size, and before you know it, you're adding and now you have large size and it's just gone against you the whole time? Is it ignoring your stops? Is it whatever it is, right? And then you need to cut that out because we've talked about this at length, and that is the fact that if you get rid of those 4 or 5 outlier losses every single year, you can flip your whole P&L up, like upside down, or actually right side up, I guess is the better way to put that, right? But there's a few things I think a lot of traders probably could benefit from that you might not be doing already. And when you do your New Year's resolutions and your year in review, it's not always just about your trading, right? It's also kind of a 360 in life, right? Health, relationships, financial, like just a full 360 of what you are, what it is to be you, and what defines you as a person, right? And what are those goals for every single one of those little silos, right? And I don't necessarily think you need to wait till New Year's to be doing these things. I think you should be doing them all the time, and they should be constantly reviewed. Maybe, if not 4 times a year, at least twice a year, like semi-annually. Look at your goals and where you're at, and ask yourself, like, do we need to adjust them? And am I surpassing things? Do I need to aim higher? Do I need to maybe aim lower? But there's a few things that, I recently redid all my goals in early October, right when I had just got back from Traders for a Cause. And I've always been very goal oriented, very very mindful of being purposefully driven and trying to achieve outcomes by planning ahead. But the funny thing is, and I've always also been very involved in my health, right? Working out and staying active, and especially with what we do for a living, right? We are constantly sitting at our desk. I mean, I have a sit-stand desk, so obviously I kind of alternate between that. But granted, we are pretty stationary for the majority of the day while we're sitting at our desk. And so my health and being active and being involved in, it's not just working out, but sports, whether it was skateboarding or soccer or, playing sports with my kids and stuff, those things have always taken a very high priority role in my life. But the one thing that most people, well, I don't want to say most people, but one thing I think a lot of people could benefit from is being better at writing down their goals and kind of planning ahead. And the one thing that I kind of have been really slacking on up until just recently, like I said, back in October, was this aspect of being very specific about the goals. It can't be vague. They can't be general. And, the reason I keep talking about working out is because this is the one thing that, made it click for me. And that was, it doesn't matter if you tell yourself your goal is to be healthy, to go to the gym 4 days a week, right? Because I was always doing that. There was never a period in my life where, I was not involved in going to the gym multiple times a week, usually 4 to 5 times a week. But it wasn't really doing it for me. And it hadn't really made sense until, I had gotten back from Vegas and I sat down and redid some of my goals and what I did was I got more specific, right? What did it mean where did I want to be in 1 month, 3 months, 6 months, a year with my fitness, and all, not just fitness, right, but all those aspects we talked about. But I'm just going to use fitness as the example because I think a lot of people can relate to it, and I also think most people could benefit from being a little more fit, right? If that's you guys, please take your health as serious as you take your wealth, because the two, I think too many people prioritize their wealth over their health, and it needs to be the opposite, okay? But true happiness, true fulfillment comes from progress. Well, if you're just going to the gym 4 days a week and working out, you're going to feel good because you're being healthy, but you're not going to have that feeling of progress. Progress comes from knowing where your destination is and seeing that you're getting closer to it, right? So one of the things that I did when I came back was, for those new goals, was at our gym there is like a PR pillar, and on that PR pillar you could set a personal record for whatever it is you want to set, and they'll put your picture up there and what the PR was, yada yada yada, right? So pull-ups, bench press, squat, whatever it is, right? Well, there's only a few people at our gym that are in this category, and that is the 1,000-pound club. And what it is deadlift, squat, and bench combined equal 1,000 pounds. And I was like, that's one of my goals, right? So I want to be on the 1,000-pound club. And it wasn't something I thought was going to be such a gigantic shift in my mindset and in my gym routine and in my day-to-day. But as I started going to the gym with this new goal, and it wasn't just the 1,000-pound club, but also by a certain date, right? So it needs to be specific, not just I need to be healthy, I want to go to the gym. No, I want to go to the gym and I want to get into I'm not saying you guys need to have this goal, right? This is just one example that I had set. I want to be in this 1,000-pound PR club, and I want to do it by February of 2023. And now the way I go to the gym and work out is a completely different vibe or just process than before, when it was my goal was just to be healthy, go to the gym and stay fit. The happiness I derive from the workouts and the amount of effort I'm able to devote to it, it's not even the same. When I go to the gym now, you wouldn't be able to convince me to not do one more rep. Prior to that, right? As long as I went to the gym, did my sets, hit my numbers, I was fine. I would go home and I thought that I was doing well. When I made that mental shift to set specific, very specific goals with time frames, it changed everything. And it's funny because I had already kind of been doing this with trading. I've always had this okay, I want to, this is what my typical month looks like for P&L. Here's what my account size is. Here's my performance metrics, like I was talking about with Tradervue. So I had these metrics in mind for specific goals for trading, but I hadn't done it in the other areas of my life. And when I did, I realized I was like, holy cow, it was the missing piece. Because with that piece, now you have your GPS set with the destination. You're not just getting in a car and driving without a destination plan. When you know where you're going, you can get there. But if you don't have a destination set, you're gonna drive in circles and be lost, and you'll never feel that happiness and fulfillment that comes from making progress. And so that was really the kind of thing I wanted to share with you guys. And the only reason is because it made such an impact on me just over the last few months. And I've been trading for a long enough time that, it feels silly to have this revelation now, but I think I talked about it maybe a year or so ago that I had fallen into this, I'm trading well enough to provide for my family and maintain a certain level of lifestyle, and that was all I needed, because the rest of my time was devoted to golf or playing with my kids and having a life outside of the screens. But there was also that mental shift of being in Vegas last year for Traders for a Cause, or actually it was this year, and being surrounded by a lot of my peers who are good friends of mine, and just having that realization okay, look, who knows how many more years of trading I have in my future, but I don't ever want to retire with regrets. I want to know hey, what was possible? And that was what caused the shift to come home and rewrite all the goals and get specific, and also want to push myself, right? Because I want to progress. You can go to the gym 4 days a week and you can stay healthy and you can trade and make a certain amount of money every year and never really push yourself, and you'll kind of fall into this funk. It's not I'm not sure if it was depression. I had anxiety issues, but I'm sure there's probably some depression involved too. And when you're progressing towards goals and you're seeing that progress and you know it and you feel it, it's really hard to be depressed, right? Because you're just so motivated and you're just so happy to be making the progress, guys. So one foot in front of the other, set those goals, make sure they're specific, and make sure it's not just in trading, or make sure you're very well rounded and do it in all aspects of your life, because you could be, there's 5 or 6 areas to set these goals. If you're nailing 2 out of the 6, but the other 4 are completely suffering, you definitely can feel depressed, or a lack of motivation, or something's wrong in your life, right? You need to have it be very well balanced to be making progress in all those different aspects of your life. So that's what I wanted to talk about. We will jump into the disclaimer real quick, and then we'll hit the Sunday prep up, guys. All right. Neither I nor TrueTrader or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. This is simply for entertainment purposes only. All right, guys, I am going to move some things on my screen so I can see now. Here is your ES chart. This is your monthly. Remember, this is the last week of the year, so this monthly candle will close at the end of this week. And it's not the prettiest of monthly candles, but if you've been with us for the last few, I don't know, I want to say few months, right? You should know what we're kind of looking for in terms of what would need to happen for this bear market to end, and that is for the higher time frames, especially this monthly chart, to quit making lower highs and lower lows. So we don't know if this is going to put in a higher low, but what would need to happen next month in January is, let's just say we close kind of where we're at, right? If January can come and break December's lows right here and come down here and possibly put in a higher low, we might end up having the ingredients for the bottoming of a market. It doesn't mean it will happen, but markets cannot go higher until they stop making lower lows, right? So if we take out October's lows, then obviously the author of the story, price, is telling you that we're still in a downtrend and this can still go lower. How much lower? We don't know. Obviously, I definitely have this level here marked on the chart. It's an area of interest. But again, we have also talked about this for the last few weeks, which is, markets aren't just going to bottom and go straight back to all-time highs, right? At least not in a healthy manner. If the market is going to put in a bottom and this bear market is going to end, my thoughts are that the way to do it in a healthy manner that is able to put in a bottom that actually supports the ability to push higher, it's going to need to digest and go sideways and build a base. That doesn't necessarily have to happen on time frames such as the monthly, but I definitely think that that's something that you would be looking for on the weekly. So let's jump into the weekly. And you'll remember, we kind of talked about, like, what is this? August's highs and October's lows. So in between those two levels, if this wants to kind of just coil up and travel sideways in this little range for an extended amount of time, then we may be able to build a base that could support a push higher or lower that could be substantial. Until we do that, right? Every kind of time we roll lower, you just kind of have a bunch of fear. New lows. You get all the FOMO, the people chasing in. I'd like to see a base get built. I'd like to see us coil and get tighter price action, narrowing of range. We've talked about that a lot. As of right now, we still could be seeing that. And until we make new lows or until we get above August's highs, I still will probably stick to that thesis. The only reason I say that is just so you guys know that I'm not changing my plan at all. And I'm just taking it week by week and staying objective, all right? So here is your daily. And the one thing about the daily is we talked about the way we lost this level here and have retested. Now, the way we kind of had that wick on Thursday and then Friday a bit of a push up, I do think we kind of want to push and retest the underside of the 20-day. But if we do that, I don't necessarily think that means we're pushing any higher. Maybe you get the 200-day out of it, but I still think any kind of major moves up into the 20-day or the 200-day are going to provide plenty of short opportunities. Now, if we don't push higher and we do end up rolling lower, as we did just kind of make, get this brush out again, as we did just kind of make this lower high here, and we technically did break as well, we could just come right down to this level here and test. If we do, that's the first real level where I'm looking at for some support to show up for some longs. Unless we gap up, and I guess I should switch into the intraday timeframes, but I kind of want to keep it here on the daily just for a minute. If we gap up, I'd be looking at this monthly pivot / last week's lows as a kind of an intermediate level of support. It's not like I expect too much out of it, so any kind of longs that I take off those levels would strictly be day trades for bounces, because I think if we test down here at 3,800, I would be thinking that the pop back into the 3,850 area might just roll right back over. So any kind of flushes down into 3,800, if I'm playing them as longs, they're just for quick day trades, for bounce trades. That kind of changes a bit if we come down in this 3720 area, where then, you know, if I see higher lows and see the market start to support those levels, that's where I can start to think about those 1 to 3 to maybe 5 day swing trades on the long side. But prior to that, everything's a day trade on the long side, because think about it, we are still in a downtrend on the monthly. We are still in a downtrend on the weekly. Yes, we are technically holding, you know, until we're above or until we're below this right here on the daily. Why didn't that? Oh, wrong tool. Sorry, guys. Meant to grab the circle. Until we're below here on the daily, this could just be putting in a higher low here. I still think this is just a pullback. That we need to see this try to go higher first and fail before I think we're going lower into major levels. Keep in mind when I say these things, right? It doesn't mean we can't go lower from right here, because I definitely think we could. But I just think that if we roll over lower, we haven't seen that attempt to really fire off to the long side ever since this big stuff up here, right? Granted, this was as good of a fail breakout as you can get on a daily chart. Like the way this wick just slammed back down and we stayed below levels ever since then, that was gross. But we've already came way back in since then, right? So in my opinion, after this big move down, we need to see that kind of attempt again, that attempt to go higher that fails, to kind of load the cannon full of powder to take us to that next level lower. And you know, this is something we talk about a lot in TrueTrader, which is, you know, things can go lower, they can always go lower, but it's not a powerful move lower until you have that failed attempt to go higher first. And vice versa, right? You can always go higher, but if it happens without a powerful attempt to go lower first that fails, then that move higher, to me, is just, you know, we could just drift higher. It's not really something that has my interest. So let's go ahead. Now I'm gonna kind of jump into the intraday so we can identify those levels. Obviously, 3,800 is the first level of support that I'm looking at. 3,720-ish is the next. Let me use an hourly for this. See if I can zoom out enough. All right, 3,720, and then obviously this 3,640 area down here. Now, as far as resistance, if we were to gap down / kind of flattish, I'd probably be looking at 3920s as the first level of resistance, but that's more of an intermediate level. I like the level. I mean, we obviously stuffed there already, and it's obviously been support plenty of times, right? We hit here, 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 kind of bounced, and then as soon as we got below it, now we've rejected. And a retest of that level, probably I'm looking to fade that, but I still think I want to see us come up and test this monthly pivot / 20 days / 3950 area. All right, and then above that, obviously 4,000, the psychological round level, lining up really nice with the 200-day, and I would probably even use that 4040 level as a, you know, a range, right, between 4040 and 4,000. So that would be the levels I'm looking at for resistance. Let me look at NQ real quick and see if there was anything to make a note about that was substantially different. Oh, I wanted to say one thing about the ES, and that is, you know, I use the ES a lot of times just because you don't have as much of the gaps in the chart, but I definitely still use SPY to compare, right? Because I always want to see what the differences are and what I'm seeing. So you see this push up here that rejected the 50-day on the SPY. It never got up to test this 39 or this 392 level. Let me actually look at the price. 391.97, so damn near 392. Okay, so it never retested 392 the same way the ES retested its breakdown level, which was at 39. Let me look at the price. 39.14. Okay, so the ES did retest, but SPY did not. Okay, so I will be watching if the ES pushes up into the 20-day, if that puts us right up into that 392 level on the SPY, because to me, that's a really big level on the SPY, all right? And think about it, if it doesn't happen in the first few days of the week, you're most likely gonna have the 20-day lining right up with that level as well. So I'm really watching 392 on SPY as well. All right. But let's look at Bitcoin real quick. I know people are always wanting to know about the cryptos. Still just range bound, still tightening. Again, we've seen this happen. We just did what, 5 or 6 months of consolidation before the breakdown, which was, I believe, if I'm guys, probably going to get a lot of hate mail about being so clueless about crypto stuff, but I believe this was like the Sam Bankman stuff, the SBF, FTX debacle that sent us lower here, right? And then since then, just sideways. To be honest with you, I'm surprised that that's all the move gave, and we've gone sideways for this long. Again, forgive my crypto ignorance, right? But the weeklies where I really focus. I think any kind of pop up into the weekly 20, that's where the resistance is going to show up. It's also going to line up where that first breakdown level was, right? This 30 or this 18. Let me see. I can just click this. It'll tell me coordinates. 18.6. Okay, so 18.6 lines up almost perfectly with the weekly 20. And if you guys need to see again where I got that 18.6 level from, that was this, right? This base, this little base that was being built before it triggered and then broke through the major support. Okay, so again, I think 18.6, any kind of pop up into those levels, you got to look at it as resistance, probably playing the fade. You can still also look at this level down here as pretty good support. I mean, it's tested twice and just been sideways since. Okay, so if we come down 15.5s, probably can get in there with bounce plays. But if we lose 15.5s, remember there's just that big air pocket under it, right, where it could easily just be going back down into the 12s. Granted, I don't trade it, but I definitely trade coin. And if you guys remember, I think last week we talked about coin. Coin's on the list this week, so we'll talk about coin again. But I just real quick, all I said about it last week was it looks like it wants single digits, right, or teens at least. We're 35 right now, but this thing just looks ugly, really, really ugly. So I'm watching. That's why I'm watching Bitcoin and the crypto stuff, just to see if there's any weakness there to take advantage of it on something like coin. All right, ETFs. Let's look at the barchart.com real quick. Go check out our sector matrix. Oh, and I forgot. I always forget this, but let me real fast. Here's your economic calendar, guys, for the week ahead. Thursday and Friday are the real 2 days. I mean, there's pending home sales on Wednesday, which the one thing to note about that is that it happens at 10 a.m., right? So don't get blindsided because the market's open. You'll be trading, especially if you trade that price discovery phase in the morning. This is something that will happen right towards that end of that opening 30 minutes. But then you got your jobs numbers at 8:30 on Thursday and the Chicago PMI at 9:45, another one that comes out during the trading hours. Okay, so make sure you guys are aware of that. All right, back to bar chart. All right, so this is the short-term matrix. Let's see. So you can't just look and see green and go, oh, strong, right? They're not very big green numbers, right? 1%, less than 1%, slightly red. Only thing that really sticks out is energy being super strong. Discretionary was really weak, and we will take a look at that one. And tech was weak. Tech got smoked last week. Everything else just kind of like middle of the mall. All right, let's look at the ETFs. Retail. I was looking at that 50. I think we said that last week. Looking at that 57.30 area for support. The way that it bounced right here at 58.30, I'm not so sure how much I like it as support now. If we test it now, I'd probably be bumping down to this 56.30 area, but I still think it's a short on all pops back into this 63.70 area. You can just draw a line right here. You guys should be able to see this. Pretty simple, right here. This was that major failed stuff. Like this was a big gap up, slam down. This I think probably lines up with that failed breakout on the ES, right? That was December 13th. Let's just make sure. Yep. All right. So I think any retest of that level, 63.60, 63.70, probably is where I'm looking to fade. XLF. This one, now it's stuff in the underside of the 200-day. I would not be looking to scoop this down here where it's holding. because I feel like a quick break under that and it's going to go tumbling. I would be looking at 32 to 31.50 as the level of support for this. And I still think pops back into the underside of the 20-day are shortable. I think this sector has definitely started to show some weakness. Let me look over at the weekly real quick. Yeah, I still, any kind of pop into the underside of the 20 days is also going to put you right into the weekly 50 as well. So into 35, looking for the fade. That doesn't mean things can't change. We've had this pullback. This is a pretty big pullback, right? And this was that what we were looking to be a more longer term low put in. And so if that's going to be the case, then it does need to start making higher lows on these higher time frames like the weekly. So if this is going to push, what you would want to see for this to get bullish, and I'm hoping most of the people that have been following this Sunday prep are probably imagining this in their head already without me having to draw that. But what you would want to see is a push up, a pullback, the higher low here, and then the break of this level to really get you going. Because then your target would be up here, and that would be how you'd get that continuation higher. But that takes weeks to play out, right? Because this is a weekly chart. So remember, something like that doesn't mean that it doesn't mean even though I want to short pops back into the underside of the 20-day, if this starts setting up on the weekly chart, I can also see the bull case for the longer term when I'm looking at a weekly chart. So make sure you guys understand that concept. Real estate, let's check this one out. Really ugly stuffs. These two here, this double top that it put in right into that really key resistance. God, I don't know why it stays on that drawing tool, but is it this? Let's see. No, it's not. All right. Anyway, that double top that it put in right into that resistance was hella ugly, and the way it broke down, pretty convincing. So any kind of pop back into this 37.80, 38 is probably a fade. Again, not a sandbox I play in a lot. But also, just like I was pointing out, retail, if you were looking at this 35.40 area as support, the way it's trying to hold a bit ahead of it, I'd probably think that's too close now and be looking a little bit lower if I was trying to look for somewhere to get long. Again, I don't know why you would want to be getting long this stuff for longer term, right? Like, I can see longs for day trades, for bounce plays. We're in a bear market. The higher time frames are still making lower highs and lower lows. Like, I constantly I work with a lot of traders that want to start these positions, these longer term longs that require them to add they want a dollar cost average in. If you guys have ever read Turtle Traders or Michael Covell or Jerry Parker or any of the guys that are the big trend traders, right? They will start a position in an uptrend and they will add to the position as it starts to work. It's the complete opposite. It's a lot harder to do because mentally you don't want to ruin your average. But they keep their losses small by doing so. If you are just dollar cost averaging in, unless you're thinking 10 to 15, 20 years, you can start staring at a loss, an unrealized loss that is much bigger than you were actually okay with. And a lot of traders also struggle with this issue where they think they're okay with like X amount of a loss, right? Like, let's just say $1,000. A lot of people think that they're okay with $1,000 loss until they're looking at that red unrealized $1,000 loss in their P&L and they realize, I thought I was okay with that, but I'm not. And when you're not okay with the loss, it becomes so hard to eat the loss. But you need to, right? Because you think $1,000 loss is bad, it can turn into 2, it can turn into 4, it can turn into 8, it can turn into a blow up. So the reason I'm talking about that is I see people that we're in a bear market and they're trying to time the bottom. They're trying to build into a position, and the author of the story, Price, is telling you that we're still in a bear market. We're still going lower possibly. It's not the time to be starting those longer term long positions. There will be a time. There's going to be a time when the higher time frames agree with us and are telling us, look, now we have controlled levels of risk and the path of least resistance is in our favor. Right now, the path of least resistance is to the downside. Don't fight trend, guys. Do not fight the trend. All right, this is XLV. Remember, we talked about this one constantly, holding this 134 level, looking like it's trying to hold it again. And, or actually, not that it's holding it. It was the key level we needed to see a break above before I changed to a bullish bias in this sector, because of how it had acted as resistance. Remember, guys. So now that we're above it and we're retesting, what I like is the fact that we're getting this little setup here. Oh man, it's not gonna let me make these circles right size. Hopefully you guys can see that. Okay, the pullback, the higher low. So a break over Wednesday's highs should get us to try to head higher. Now it doesn't mean we'll make it to the target, which would be up in these 142s. What I would be monitoring if we make that trigger. If we trigger that long here and we can't, did I not just click this? Come on. If we can't get up to this target up here, the highs, that might put in a lower high here on the weekly chart, which if that happens, then a break of 134 could really send us tumbling. So that's something I'll be watching. But I still like this sector. I really like the way this is setting up. I like the way it's holding not just the 134 level, but now you have that 50-day creeping up there as well. So again, and keep in mind why we do the sector analysis, right? We start with the broader market. We're trying to get this top-down view, right? Start the broader market, look into the sectors. We're trying to see where's strength. Where can we feel a little bit better about being long biased? Where should we not be getting long? If we're okay with shorting stocks, where should we look to short? Where's smart money going? Where's money got their hands off, right? I like XLV. I'm not looking to fade this. Meanwhile, you got other sectors that look like crap, right? So remember why we do this. Always keep that bird's eye view. Okay. All right. So here's your materials. I still think as long as we shove up into 82, it's a fade. I think we come down into 71, it's a long. Right now, I do kind of feel like it's in no man's land, right? It's still kind of like a bit under the 78.50 level, which was a key level from pretty far back. But it's not well under it, and it's not stuffing it too hard. It wouldn't take much to reclaim that and maybe push up into the 20-day. But this whole middle of no man's land stuff is like, for me, it just means nothing. It means don't touch. No, there shouldn't be any reason to trade this area, right? We move up into this 81 to 82 level. Now we have a reason to trade. We come down into this 72, 71 level. Now we have a reason to trade. Industrials, probably same thing, right? All right, industrials, I do like that we're kind of holding the retest of this trend break. But remember, to me, trend lines don't mean near as much as trend means, okay? But we have had this big move up. We have made a pullback, and if you look at these higher time frames, it wouldn't be too unfathomable to see this start to hold and push again. I would be more bullish on this sector than materials, for sure, the one we just looked at. But I would like to see some things happen first. First things I would like to see is a reclaim of 99, and then I'd like to see higher lows. I will treat Thursday's price action as a failed breakdown, just like we were talking about with the ES as well. So a quick little break above 98.53. Let me give you the exact price. 99.24. Over 99.24 should give us a push, right? I don't expect that to be where I want to chase. I don't want that push, that momentum, that volume that comes in on that break to be where I'm buying. I want to see what happens after. Does it slam up into this 101 and give us a pullback to rebuy on a 100 test or a 99 test? And when that happens, do the buyers show up? That's the kind of way I'd like to enter something like this. I don't want to be the guy buying it on the break. We're still in a bear market. Buying breakouts gets you this candle right here, guys. Okay? Buying breakouts in a bear market is a quick way to just be down instantly, right? You just, oh, it's a breakout. You buy, and before you know it, you're just underwater almost immediately. So XLU, this one is really, really starting to look, and actually there'll be a play this week that I want you guys to see that's in the ideas. Okay, so we have pulled back, pushed up, failed a little breakdown right here, and now we triggered above above Wednesday's highs on Friday. I'm looking to see if this stuff's, if we break Thursday's lows, I think we have the short trigger for this to head lower, okay? We've talked about this sector quite a lot. I really think it just needs to get below last week's lows. I think under 69, this thing might be coming down to 65. And you'll see when we get into the ideas, there's a trade from the sector, so it should make sense, right? And that's another thing I want you guys to understand. When we look at the individual ideas, understand how they relate to the sector analysis, okay? I'll try to point them out, but if I forget to, you guys should be able to remind yourselves. All right, staples. Another one that kind of reminds me of industrials, right? Retesting the breakout, retesting the 200-day, putting in this little higher low. I think a break above Wednesday's highs can give us that push. But just like with industrials, I don't want to be the guy that's buying on that break. I might want to scoop dips with really tight risk. I mean, I think you can just use under Tuesday's low a day as your risk. I think scoops down into the 200-day, that quarterly pivot, look good in anticipation of that break. But if it doesn't come down and give you those scoop opportunities and instead just wants to go up, I don't want to be chasing it. But I will watch, if it does that, I will watch to see if pullbacks start to hold. You have that 75 level, which is a round psychological level. It's also been a key level. Now, remember, we wanted to look at this one. Discretionary, just hideous, right? This is extremely relative weakness, relative weakness. Anything in this sector that pops up into these recent levels, big time short for me, okay? The only thing that could really happen is this turn into a failed breakdown and it gets really, really strong. But I think if that happens, it's going to be really, really obvious. I think if this thing just looks like it's, struggling to push, comes up into this 133.40 area, that's the first level. If it wants to push further, great. I'll even take some paper cuts in order to get the short up into the 20-day, okay? So the discretionary sector is hideous right now as far as relative strength and weakness. Communications, another one, relative weakness, never got a big push. Any kind of push in the underside of the 20-day / 50-day / monthly pivot / recent breakdown level of 49. And also you have that backstop of 50, which is another psychological level. Big time short, okay? Bio, I think bios look good. I think it's still holding. Remember, we put this circle here for a reason, right? We talked about this as far as trends are concerned, right? This was the last higher low. And so as long as we're still above it, which we are, we're still holding. Actually, I don't need to draw that. It can still hold. If we break below that 78.66, I think we come down here and test 75. It doesn't change. It doesn't make me get super bearish. Remember, I think I already said that last week or maybe the week before, but a break below 79 does not make me get super bearish. I'd probably be more bullish in terms of like what I'm looking for in trades. I think I'd be looking to scoop bios that are on my list if the sector can pull back to 75. If not, I think we still could just break and get going. I think this thing looks really coiled. It's getting really, really tight here. Looks like it's about to make a big move. Tech. Last week was pretty ugly for it. I think pops back into 129, looking to fade. But there's so many names in this sector that are going to get sold off just because of the sector and the fear. And there's certain names that in this sector that are just daily traders. They have liquidity and range, and they offer amazing opportunities from a day trade perspective. But I would not be looking to get long anything long term in this sector right now. Okay, so what I'm talking about why I'm talking about that is because I think down into this 120 to 119 area, I'm looking for bounce plays for sure. But any kind of pop back up into 129, 130, I'm looking to fade. Energy and oil had a good week. Granted, it still needs to get above this. This is energy right here. Energy needs to get above, let me try to give you the exact price. 87.36, okay? Above 87.36, this thing could get going. I think it may struggle initially with a push into 90. But remember, zoom out, make sure you guys understand, like, there's only a few sectors that have this kind of chart in this bear market, and it's oil and it's energy. Okay, these are uptrends. So I like these areas that we're in right now. I really do. I think there's there's definitely long opportunities in oil and energy. At a certain point, we will get this bull trend on these sectors will get long in the tooth. I don't know when. I just know how to read trend, so I will know what to look for to tell me, what's the canary in the coal mine for me. For me, it's when higher time frames start to show you that the trend is reversing. Till then, just let it pay, right? Don't be fighting it. Anybody that was shorting energy and oil for the last year or so has just gotten smoked unless they were day trading it and just patient for those overblown exhaustion moves, right? There were a few times when oil and energy looked pretty obvious that you'd have to be crazy to be buying it, right? Well, that's the times when I like to get involved on the short side, even in an uptrend. So that's it for the sectors. Let's get into the individual ideas. Let me switch to a daily chart. First, so long setups, strong stocks, looking for continuation. The first name on my list is BBWI. It's not as liquid as I typically like them, but I do like the fact that we triggered on Friday. It's now kind of just a matter of, can I get an entry? Let me see what I wrote as long as we're above 39, which was this low here, as long as we're above that, this setup is still intact. Again, why do I say that? Because it's about getting an entry where you like the risk reward and you are at peace with the outcome. So I think 41, is that what I wrote down? 41.30, yep. Let me get into an intraday. 41.30 is going to be this little area that held on Friday twice, okay? Right below it, you have this 41.20 area, which was kind of like the little flag break intraday. And then when it pushed, it pulled back, held that 41.30 area. So a flush, it depends where we open, right? If we open 41.50, 41.30 is probably too close. Now I'll watch it. What I'm going to watch for is, even if we test it, I want to see higher lows. I want to see buyers step in so I can have defined risk. But if it doesn't want to hold there, the next level I'm looking at is 40. The reason I like 41.30, the reason should be obvious, but the problem with it is what I should say. The problem with 41.30 is I'm not giving it till under 39, right? I'm not going to give it almost 2.5 points of risk when I'm thinking that this might move back up to 45, okay? But even if it gets that move to 45 or higher, it's probably going to have pullbacks in between. I don't think I'm going to ride a full position up to 45. I think 43 is a good spot to sell some, 44, and then possibly 45 and higher. But I'm not going to give it to 39 if I'm entering at 41.30. I will stop out probably under 41 and revisit it at 40. If I put it on at 40, I'll probably give it to under 39. So 40 is the next level. And you can see it's been support twice, right? On Thursday, pullback, held, bounced, but then we got under it. Once we reclaimed, it was holding, held Friday off the dip, and that's where we pushed from. So I do like 40, and you can just zoom out a little bit, right? It's pretty simple to see. You can literally just go straight across right here. Whoops. Hold on. There we go. Yeah, so 40 give or take, right? But under 39 is where I'm going to be wrong and stop. But I like this chart, guys. I do like this chart. And also, I am kind of more of like looking at a swing idea. Obviously, the initial idea will be a day trade, but there's no way it's going, well, I don't want to say no way. I highly, highly doubt it's going 43, 44, 45 first day. Unless, it opens 42.50, pulls back to 42 and holds. Yeah, you can see 43 same day, 44 maybe. But my targets on this most likely are a 1 to 3 day swing, especially if we have to pull back to 40 to get our entry. And that's kind of the reason I was okay with something that trades, what's the average volume? 3 million shares per day, because it's most likely going to be a bit of a swing, okay? That's BBWI. BTU is the next idea. BTU, what sector is this, guys? Energy, right? I like this chart. There's been this 28 buyer for about 2 weeks now. So any flush off the open into that 28 level, I'm probably going to be there. And I did make a little note that if we don't get the flush over Thursday's highs, which are 29.70, over 29.70, and I'll probably be looking to join trend on dips. Remember, sector specific ideas. Why would I look at BTU? Well, we just talked about energy and oil, right? I mean, I think both energy and oil are in extremely good spots as long as we don't lose last week's lows, right? As long as oil is above 129.50 and as long as energy's above 82.60, let's just call it 82.50 or whatever. You know, as long as we're above last week's lows, I think these charts are ready to push again. So it makes sense why my eyes would gravitate towards something like BTU. And trust me, there's other energy and oil names you could be looking at as well. This one is the one that I chose, but there are definitely others. Next idea is LLY. So I'm either looking to buy a flush, and you'll see I have two alerts set. Remember, again, why is LLY on my list? XLV. Remember XLV? I think we're looking good here. So again, there's other names in this sector that look good as well, but I like LLY. Now, granted, this one is a little bit light on volume. It had a really, really low volume day on Friday. Not quite sure why that was. Obviously, you can see it happens a little from time to time, but I'm not going to let this 1 million share day make me not take this trade, because I know on average, we're trading 2.5 million shares per day. And keep in mind, we just looked at BTU, which is trading 3 million shares a day, but it's a $28 stock. Keep in mind the relative correlation, because there's average volume, but then there's average dollar volume, right? 2 million shares a day, but it's a $360 stock, right? The amount of money flowing into this is much, much more than is flowing into BTU. So just keep that in mind. But I am looking for either a flush into Thursday, Friday lows, / that annual pivot, or a break above Wednesday's highs, which is 370.68, and then I'm looking to buy dips and join trend. Again, this sector's just been really, really strong. Just surfing the 20-day, right? Pull back to the 50-day, reclaim the 20-day, just holding. It looks like it's ready to bust out. And honestly, like every time I've talked about any name in this sector, look at these charts. We've been talking about all these charts for months now in the Sunday prep. Like, I'm almost positive MRK, CAH, and LLY have all been ideas in the Sunday prep in weeks past, and they were always on the long side. The trend is just black and white, obvious, easy as day to see. No point in fighting these things on the short side, right? So keep that in mind. And the last idea for this sector is Meta. Now, granted, it's in a sector, the communication sector, which relative weakness, but this is one of those names that's really, really coiling. And in my opinion, if we start to bust out of this little consolidation, it could easily want to go 130, 132. And so the idea I've got is over Wednesday's high. I'm looking to join trend. But the cool thing about when we have ideas like this, so you guys hopefully have noticed, usually there's two ways I look to enter. A flush into a level, like typically I would say on this, into the 50-day, I'd scoop this, right? But then the other ideas are where I say, no, first it's like the complete if-then statement, right? If we break Wednesday's highs, then I look to join trend on dips. Why would I say that about Wednesday? Well, because we've got this little pattern here where you got the pullback to the recent low. Let's see if we can drag this here. And then you got this higher low, right? It's a simple setup. So over Wednesday's highs confirms this higher low, and then we should be able to at least test the top of this flag, possibly this 123 area. And if you're getting in 120, a move to 123 as a day trade is a great move. Take 2-3 points and leave a runner, right? Because over these recent highs, over 124.60 or whatever that is, 124, over 124.67, and I think we're going 130, 132. Okay, simple as that. So that's it for the strong stocks looking for continuation. The next setup is oversold reversion. It's the exact same one as last week, which was Tesla. And so I'm hoping I'm hoping we flush out. If you're wondering where these lines come from, this is a weekly chart, right? So this level is 119.67 was that last breakout that we have not retested since the actual breakout happened. And one of the things to note is the way Tesla behaves from a technical standpoint, right? Like this level here that we had drawn out, the first time we tested it, it bounced, right? Look at the first time we tested this level here, bounced. So like these levels usually get respected very well, okay? So you gotta have them, you have to have them on your charts, even if you don't trade just off technicals. You need to see what other people are seeing, because when something respects technicals that well, you'd be crazy not to know where they're at. So I think what I want to see is 117s. I really want to see a flush out in the 117, but I don't know if we will. Why do I say that? I just think maybe this 120 is it and we push. But you got to understand, reversals, when something gets oversold, and I'm not saying Tesla's oversold. Tesla can go lower. Tesla might test 100. I don't know. But when something is getting sold off and sold off and sold off, and it speeds up, it starts to pull away and get extended on even the lower time frames, right? Like it's easy to look on a daily chart and say, oh, look how far we are from the 20-day, right? You can even at times, look at an hourly, which is, if you look here on Thursday, look how far we got from the hourly 20, right? It can only extend so far before it finds, one, buyers, and two, it runs out of sellers at a certain price. Before it has to bounce, consolidate, and then make a decision. Do we go lower or do we try to go higher? So that happens. It happens on all time frames, but it works its way down to the lowest time frames. And when things reverse, they always reverse on the lowest time frame first. It's impossible for something to reverse on an hourly chart or a 30-minute chart or even a 5-minute chart if the 1-minute chart is still making lower lows and lower highs. It cannot reverse until those lower time frames first reverse. And I know that really sounds like very stupidly obvious, but that's one of those things that people tend to forget, is that, like, if I'm looking for a reversal on the daily chart here on Tesla, well, I'm looking for an extension on a very low time frame so that I can get involved in the stock with low risk, because I don't need to put too much size on. And if that time frame then proves to start making higher lows and higher highs, we know what we need to look for on the next time frame up to see confirmation. At which point, when that starts to happen, we can add to the position. And when it happens on the next time frame, you can add to the position. So by the time it reverses on even an hourly chart, we could already have a position from much lower, and we're adding to a winner instead of adding as it's going lower. So what I'm doing is stalking this every single day. I don't know where the bottom's at. I would love to see capitulation, but I get the feeling, I really get the feeling that there's a chance it doesn't give us that capitulation trade. Just because it doesn't give a capitulation trade doesn't mean it won't give you an opportunity to catch the reversal. And that's the one thing I want to make sure I'm there for, because this thing does have the ability to push back 140, 145, 150, right? Like the breakdown was 165, okay? And so the lower we go, the better. But you have to know what to look for to see those reversals. So 117 is what I want, but I'm watching it tomorrow morning during the open, to see maybe we just break Friday's low a day and then reclaim, start to push. Maybe we don't even break Friday's low a day. Maybe we gap up, and then I have to watch for a flush into some of the key levels from Friday, right? Maybe we open 129, 130, and then I'm looking for scoops at 125, right? So make sure you guys understand how to get involved in these trades, not just like the ideas that I have. I want 117, I want even lower. But once a flush into 117 and I scoop it just for the emotional factor, right? But that's a day trade. If this thing starts to prove and confirm, I think you can be adding to a winner and could have a really big trade on your hands. All right, so that's it for the long setups. Short setups, weak stocks looking for continuation. Coin, like I said, we'll talk about it. I still want the same idea from last week, 40-50. Okay, we haven't retested it. It was the major breakout area. It was a it's a no-brainer spot. The 20 days right there as well. So any kind of major pop into 40-50, I'm looking to fade coin. Disney is the next one. Para into 9120/92, and I'm looking to fade this. So 9120 is the recent short trigger that we broke under. Let's see if we can draw that. And then 92 is your 20-day slash. I mean, you guys can see where this trend line thing came from right there. So, you know, just this, whoops, things acting skippy here. So we had, you know, this trend line's held quite a few times. Again, trend lines, hopefully you guys understand why I have my chart. They're visual guides, okay? But the downtrend is undeniable. And here's a good example of those if-then statements. This was a long idea. I want to say however many weeks ago this was. These circles here were drawn from, this looks to be about 3 weeks ago, Sunday prep. And this was a short trigger below this 94.68. Below 94.68 was the short trigger. Failed short triggers create very powerful long triggers. So we're able to say, look, if this doesn't go down to these lows down here and fails, then above 100.89, which is the high right here, is the reversal. Okay, so we were able to say, if we get above those levels, then we want to be joining trend on the long side. Well, look what happened. We never got above them. The plan never gave you the if this, so you never had the then that, right? So the ability to create those if then statements allows you to just stay sidelines and safe until what you need to see happens. And that's the power of it, because now we've gone to the target, the short trigger did its thing, and now it's just trending lower. So now I'm able to look at it and go, cool, trend is continuing lower, any pop back into resistance I want to fade. It's as simple as that. All right, the next idea is MRVL. I would love a short into 40 on this. You got the monthly pivot. It was also the breakdown level after that last major push that stuffed. So any kind of push into 40, and I'm looking to fade. All right, and snow. What did I write down on this one? Under 131.97, and I think this thing really unwinds. Where's that level? It's right here. Okay, so this is like your major short trigger, and I'll look at a weekly to show you how. Look, this is that major push stuffed, and a fail under that level should get us going. It should get you down to here, 120. I don't even know what this level is. I'll pull it up in a second. 122.77. And if it loses that, we're probably going 52-week lows. But I want to get involved in it earlier. So basically, I'm looking for this to be under 130. What did I write? 135? Trying to remember what I wrote down. 134.79. Under 134.79, I look to join trend, shorting pops with defined levels of risk, or a pop into 144.50 into that monthly pivot slash Thursday's high. You can see it's been a few times where it was the high of the day. So 144.50 on a parabolic kind of rip off the open. I would probably put this on as a short, and I would probably use over Wednesday's highs as my risk, and look to swing possibly if it closes weak. I really think this does eventually kind of come under this 132 level and come down to this 123 area. Okay, so that's snow. And I did want to kind of just point out one more thing on crowd. I completely botched this by not having, for some reason my alert didn't tell me when we got into this 111 area, or 110, what was it, 110.33. But I still kind of want to be involved in this because I do think we're coming down 94-ish on it. So any kind of pop, I think 111, 110.50, I'm probably going to be looking to fade crowd. I think this is going to come test this level. This is a major level from back here, right? So I think we're coming 95s on this. We'll see. But I just want to throw that one on there. It wasn't on the list this week, but I did want to just add it kind of freestyle. All right, so overbought reversion setups. There's nothing. I mean, shouldn't be too surprising, right? Nothing's really that extended to the upside right now. There's one that I didn't have a category to place this in, so I just put other setups, and that is Duke Energy, DUK. Why? Because the sector. Remember we talked about the sector. So it's been a strong stock, right? So it's one of those things where typically this would be strong stock looking for continuation. But if you remember the sector, we've talked about this plenty of times where I think we're putting in a major lower high up here and we're going to come lower. We just need to lose last week's lows, okay? So if that's going to happen, the only reason I even care to stalk it in the sector is so that I can have an individual idea to express that idea through and exploit this opportunity. So basically the idea is a break under 99. What did I put? Basically just under 99, okay? But what I'm looking at, we've already had the long trigger, okay? So here's your pullback. Here's your little higher low. This was your trigger, okay? So there's your trigger, and it even had a secondary one, right? It even had a higher low here, and it triggered again, okay? So when it's doing this, the author is telling you that he wants to come up here and test this, okay? This 105.52, okay? If we fail to get to 105.52 and just stuff the underside of that 200-day, I may look to get involved in this anticipatory and ride this for that break of 99, okay? Because I really do think this is a bigger trade setting up here. Now, granted, if we break 105.52 and start to hold and go, there was never this if-then execution, and we never had to have risk. So basically, you can stay sidelines until you see this start to reject and start to make lower highs on a time frame where you have set risk. If it never gets another push and we end up, Friday's highs is kind of it, and we gap down or whatever and start to just drip lower, then under 99 is the trigger, and I'm looking to short pops back into 100. Okay, very simple, but that would be a swing kind of idea to the short side on DUK. All right, that's it for the Sunday prep. Let's see if there's any questions, and then I will wrap things up. Second here. All right. Thoughts on COF short at, this is from Javier, 94.50 area. Let me look at that. He's got two names, so let me look at COF first. Remember, COF is financials. We talked about XLF. Remember, XLF. Whoops. Type CLF. Remember, XLF pops back into this 34.40 area is where I'm looking to get short into this sector, right? Or a break below 33.20, and we probably look to short pops and join trend. So COF is in this sector. So knowing that, you have to ask yourself, where does this line up kind of with that sector? If that sector were to pop into that resistance, where's that going to put Capital One? 92, what is it? 92.40 is like that breakdown level. Is that what you were asking about? 92.40? No, he said 94.50. So 94.50 is going to be the second level I would look. I would keep an eye on this right here though. Whatever this level, let's see what this level is. 92.50. I'd keep an eye on 92.50. It's a 2-point pop from where we're at. It's a three-point ATR. It's, it had a thin day on Friday too. Friday, you know what? I don't know why I didn't look at this. It was Friday a low. Yeah, it was pretty low volume just on the index as well. It was, if you guys remember Friday, it was boring as hell. All last week was boring, right? So yeah, I like 94.50. It's the 20-day. It's you got that pivot as well, but I think I would keep an eye on 92.50 as well. Okay, but I like that idea. So Airbnb was the other one he's asking about, and he says short at 91. Yeah, I mean, you can see I got this chart annotated heavily because I trade Airbnb a lot. Yeah, I think it's a big level for it right there. Obviously a little bit higher. The breakdown level was at 91.27. It's tested it again at 91.21, and your pivot's at 91.24. I would probably be willing to give this one room for a push into the 20-day as well. Obviously, you have that 92.90 area, okay? So watch 92.90 to 93, but 91 definitely looks like a good spot on Airbnb for the fade. And again, I like the ideas because just look at the chart. This is the kind of chart I look to fade. This thing has been weak for a really long time. Have there been opportunities to get long? Yeah, but you're longing a stock in a downtrend, right? You're fighting the path of least resistance. Right now, path of least resistance is to the downside. So I love short ideas on charts that look like this, right? So, and Javier knows that. So kudos to him on having his eyeballs in the right place. Let me see if there's any other questions real quick. Ken in Miami says, I think Baba triggered the short continuation on the daily. I'd be open to shorting a pop into the underside of the 200-day and risk 12-13 highs. Thoughts on that? The one thing I'll tell you is, no, there's no short continuation on the daily here. So all we've gotten so far on the daily is the pullback into the 20, and what the way you would get this thing to reverse, because you can't have a short continuation when you're in an uptrend. This is an uptrend, right? We've just been up, okay? You can, the cheat sheet is the fact that 20 days pointing upwards. The real way to know is just by knowing how stocks move, but we've had the pullback into the 20-day, so here's your pullback. This might or might not be a higher low. If it is, we'll need a break above this level here to trigger. If that happens, then below 1220, these lows here, what is it, 85.04, that becomes the trigger to roll over lower. But first you need a long trigger first to fail. But the one thing I will point out is this. I think all the Chinese names have these flags building, man. Like look at JD, look at Billy, Baidu's a kind of thinner name, but they're all kind of just, they're in uptrends, and they got these little, every one of them has this little flag you could draw if you just, and they all look like they're gearing up to make a move. Like Baba's no different. Let me get the drawing tool. Now I don't know if they're gonna go higher. China's got a ton of uncertainty around it because there's the talk that they're underreporting the COVID numbers. There's a, and the other thing is, if you look at Baba, what do all these Chinese charts have in common? They're all really, really gappy. Why? Well, because China is 12 hours, I think it's 12 hours ahead of us, right? So, while we're all asleep tonight, their markets are going to open, and then when our markets finally open, they have to play catch up with a big gap up or a big gap down. So one, it makes it such a pain in the ass to swing anything in these sectors. But two, we got to kind of just wait and see, because the other thing that could happen is maybe this doesn't make a higher low here. Maybe we just keep coming lower. But at that point, it's still just the first pullback into the 20-day, okay? But I still think, I'm still in this MOMO as well from the Sunday prep last week. And I still think I like this flag. I think I like a lot of the way these things look. I don't know about Neo, no. But I think there were some others that had some nice looking flags. This chart looks like it's just curling, right? This looks interesting. I don't know why I hadn't looked at this, but over Wednesday's highs on XPEV could get interesting. Okay, but a lot of these Chinese names have these charts that look like they're just making their pullback into the 20-day, and they might just make these flags up here and get another leg higher. So let's see here. Josh is asking about AMC. I'll save my thoughts on AMC. So Lucas says, hey Ricky, some traders give a lot of attention on VIX daily and trade accordingly. Do you have a take on it? I watch VIX because I know that when volatility's higher, my setups perform slightly different than when volatility's lower. But one thing I hate is when people try to draw technical analysis on volatility products, because you can't. You can look at this chart and try to make sense of lower highs, lower lows, higher double tops, head and shoulders, all this stuff. It doesn't work that way. Volatility products don't work off supply and demand, so you cannot use technical analysis on them, guys. So make sure if you guys are watching some kind of guru on YouTube or whatever, and he's doing technical analysis on a volatility product, you should probably go find somebody else to watch. Yeah, so that's my take on it. Is I watch it only to know how much fear is in the market. That's it. And you know, and I track. So it's something I track. I track the closing VWAP price of VIX, actually VXX. I track the closing VWAP of this every day in my spreadsheet, so that I can look and see how my setups perform with VIX at 30, with VIX at 15, with, you know, because that matters. That actually matters. And that was something I picked up from SMB Capital, right? That's something that Mike Bellafiore talks about. And that was one of those nuggets I was able to glean from somebody else. And hopefully you guys also pay attention to some other great content contributors out there, right? Like, obviously I'm very biased for TrueTrader, and I think you guys could learn a whole lot from what we provide over at that community. But like, I'm also a huge proponent of networking and reaching out and learning from some of the other great traders out there, and there's a lot of them. All right, so I don't know if there's any more questions. I don't see any, and honestly, I really do appreciate you guys tuning in on your holiday. Make sure you check out TrueTrader. There is a coupon code. I believe it's YouTube in all caps. Get a discount, and come learn the nuances of what I talk about on the Sunday prep, because this is only an hour, you know, or so, and I'm only able to fit so much into it. But if you guys really want to get down to the nitty gritty, come check us out at TrueTrader and learn how to actually trade. If not, I'll see you in the markets tomorrow, guys. It's a short week, so stay safe, protect your neck, and I hope it's not your